Hey Patrick, I'm just getting around to making this video for you. I've been really busy, so I don't want to go back and reset up all the reset up all the charts for the new numbers you sent, just for the sake of sending you this video and sort of bringing you up to speed. I'm just going to stick with the same numbers that I think we were utilizing these numbers a week or two ago. So with that in mind, we've got on one chart I have the ATR version 2 614 56 minute, and then on a second chart I have version 5 TF 614 22 minute. On this one, I just have the price action and the CGO set at 22 minute. The CGO cycles 54. Again, this was a number we were using a week or two ago. And then the chop meter. Move this back over. And then you see what I've got here on this screen. It's just the ATR, the Kaufman efficiency ratio, and then again the chop meter. You'll notice that this is says balanced here, and if you just go to indicators, click on Kaufman efficiency, you go up here to the momentum formula. You have two options, the classic and the balanced. We want to use the balanced. Just hit apply, okay, and bring you back up here. I also had the data box on the screen here when I was doing all my analysis. And yes, it was a bit of a chore scrolling through this chart, looking at all the data here on or in the data box, and then as well consulting this the other chart. So what I was doing was looking for accordance with all three of these. The three being the ATR, the efficiency ratio, and then the CGO. And the way this is set up is that on the efficiency ratio, I just use the you set it on balanced, and then we'll just run with the default numbers. So let's take today for instance. The way this works is this has a built-in chop line here, and the high probability trades are going to be above this 31.62 number here. That's what this is, and you can see it's all color coded. You know, you probably figure this out. The signal line here is the red line, and then the efficiency line here's the blue line. That's when the efficiency line crosses the signal line, that's when we want to trade. And this has to be above the chop line. Now, we will miss excuse me, some opportunities, but by and large, if we're above this 31.62 chop line, and we get our crossovers here, and our ATR and our CGO are in accordance, then initially, you know, this all appears that we're getting, you know, we're stepping into some high probability moves. You know, based on my email and backtracking over the month, you know, I want to do some more testing with this, but this seems to focus only on the high probability, high momentum movements, where we can get in, make some decent money, not have a great deal of drawdown, um, and just chop and end up having situations where we lose $1,000 or more in a day. Um, so as I said, in the email, it's not going to be trading a whole lot. There were some instances where there were 2 to 3 days in one period. There was a 5-day period where there were no trades, and I'm okay with that. There's no need to overtrade and make our broker some money and potentially lose money. But at any rate, let's see here. Let's get back to today. So here we have our open, and how I've been looking at this, and if this continues to work out, I'll have it coded this way, is that we continue with our signal here, like we had been, say here on the open, we're getting a short signal, so we stick with that. We would take a short here. It looks like we would have had an enormous drawdown here. Let's see, 1121 to 1129, about $850, $870 drawdown, but we were still in the trade. We would not have taken it right here on this bar. The way this filter works is that, as I said, we need to be above the chop line, which we are. The efficiency line has to cross the signal line. It works either way, on a long or a short. It has to cross and go up. We're basing our entries off of the signal we get from the ATR. So here on, let's see, this is sort of in the middle of a bar. I had not seen a scenario like this. What I was doing was, let's say in this instance, I would just move on to the next bar. I want to keep the risk factor low. I know that, hey, we're missing some, but with the preliminary numbers I had from last month and the number of trades, I'm like, you know what? I'm not going to get greedy and try to code this so that it catches this move, because more often than not, it'll probably cause us to trade more and lose more money. So I'm happy with this calculating on this next bar. You see we've got our efficiency line crossing our signal line. We're above the chop line. So we get in at the open on this bar, which is, let's see, 1120.8. And our entry and exit rules are that as soon as the chop meter decreases here, then we get out on the next bar. So now that we have our entry here at 1120.8, the chop hasn't decreased here in the last 2 bars. I would also consult the CGO to confirm that on that bar, I think, what was that, two bars ago, or 3? Yeah, 2 bars ago. Well, we're on a different time frame. Let me see. That's the 11:48. So that would, $11:48. It's going to be right. I think it's this one here. Or no, maybe that one. I would have to drag the, bear with me a second, I'm going to have to drag this data box onto this screen so I can, let's see, hang on a second here. Really all I need to do, I just wanted to be able to show you this, but I believe, because it looks sort of questionable here. Basically what I'm getting at is we need to be in accordance on the CGO also, and I want to make sure, because you go back to this bar. Let's see, that's the 1112, so we're okay. We're going to either be in on this bar or this bar, but nonetheless the CGO is in accordance. We're in a downtrend, so we're good there. So this would be a good entry. We get in here 1128. We're currently at what is this? 1098. Yeah, fuck, that's $2,000. If see if I did that right. Yeah, 1120.8 to 1098. Yeah, that's a little over $2,000 right now. So that's it. And I believe that I was basing my the exits off of the chop meter on the ATR, just because I have the, yes, I was, because I have the efficiency ratio on this screen, along with the data box. So that's how I was obtaining the exit info, and then I was just consulting the CGO on the other screen as confirmation for the entry. So to sort of recap here, I'm sorry if I've kind of jumbled around. I'm kind of tired of just trying to look at my notes here in the background and explain this to you. Everything else would remain the same here. We as far as what we had established before regarding our entries and our exits. The only difference is we add this to the equation to look for, it sort of motivated me to look at this is when you had said, let's try to look at, just those similar moves. I don't know, it was a week or two ago, but you said let's see if we can't look at just situations like this and just be trading opportunities like that. So yeah, we trade significantly less based on some numbers. This, we would be trading about 1/3 to 1/4 less with this method, which in my mind is good. If we can trade less, keep the risk down, the commissions down, and make more money, that just makes absolute sense. So at any rate, I hope this makes sense to you, and sorry if it's kind of jumbled around a little bit there, but I just wanted to get something together for you, so you can hopefully wrap your head around it, and you and I can get on the same page. All right, let me know if you have any questions or problems. All right, man, I'll see you.